All right, strap in, everyone. Today, we're going deep into the world of a trader so successful that he's been called an unknown market wizard.
Yeah, a trader so good that Jack Schwager himself was seriously impressed.
That's right. We'll be exploring the incredible journey of Peter Brandt, as told through the pages of Schwager's book, Unknown Market Wizards.
Now, what makes this book particularly fascinating is that Schwager actually claims to have found some of the best performing traders he'd ever encountered while writing it.
It's a bold statement coming from the guy who literally wrote the book on market wizards, right?
Exactly. It just goes to show you that there are some truly incredible individuals operating under the radar in the trading world.
Okay, so less talk, more action. Let's get right to it. Who is Peter Brandt, and what makes him a market wizard?
Well, for starters, Brandt is a futures trader with a career spanning over 40 years.
Wow, over 40 years. That's a long time to be in the game.
It is. He started back in the 1970s during a period of, booming commodity prices. And get this, his track record is absolutely phenomenal. We're talking about an average annual return of 58% over a decade.
58% over a whole decade.
Yeah, that's not a typo. That's consistent, calculated performance over a long period of time. Just to put that in perspective, if you had invested, let's say, $100,000 with Brandt at the beginning of that decade, you would have walked away with well over $1 million.
Okay, now that's what I call making some serious bank. But even for the best traders, markets can be incredibly volatile. How did he manage that level of consistency amidst all the inevitable ups and downs?
That's where Brandt's deep understanding of risk management comes in.
Risk management, the not so sexy but oh so crucial aspect of trading.
You got it. You see, while his returns were indeed impressive, they were definitely coupled with some pretty high volatility.
Man.
That means there were significant swings along the way. But what really matters is how he navigated those swings.
Yeah.
And that's where this thing called the Sortino ratio comes in. It measures risk-adjusted returns.
Okay, break that down for me. What exactly is the Sortino ratio, and why is it so important?
Think of it like this. It's a report card that not only tells you how high you scored, but also takes into account how many times you almost failed the test. A high Sortino ratio basically means you ace the test while avoiding any major slip-ups.
So it's not just about making money. It's about making money without blowing up your account in the process.
Exactly. And let me tell you, Brandt's Sortino ratio is stellar. It indicates that his big wins far outweigh his losses.
So he's not just rolling the dice and hoping for the best. He's carefully selecting his bets and managing his risk like a pro.
Absolutely. That's what sets him apart from the crowd.
This is already painting a picture of a very calculated and strategic trader. But I'm curious, what was his path to becoming a trader like? Did he always know this was his calling?
Well, that's where things get really interesting. Believe it or not, Brandt's journey to the trading floor wasn't exactly straightforward.
Okay, now you've got me hooked. Spill the beans. What was his unusual path to becoming a trading legend?
He actually started his career in advertising.
Advertising. You're kidding, right?
Oh, totally serious. He was working with some big-name clients like McDonald's, Campbell's Soup, you name it.
So what on earth was a future market wizard doing in the world of jingles and slogans?
Well, as fate would have it, he had a chance encounter with the soybean trader at the Chicago Board of Trade.
Fateful encounter. This is starting to sound like a movie.
Right. And this chance meeting really sparked his fascination with trading. He was captivated by the energy of the trading floor, the challenge of the markets, and the potential for, those fancy cars he saw in the Board of Trade parking lot.
Okay, I can relate to that. So a chance meeting changed the course of his life. This is already so intriguing. What happened next? Did he just quit advertising and jump headfirst into the trading world?
Well, not exactly. It wasn't a completely impulsive decision. He transitioned to Conti, a brokerage firm, where he entered a very rigorous training program.
So he had this unique combination of advertising savvy and financial training. That's not your typical trader's background.
And I think that really gave him an edge. It allowed him to connect with clients, understand market trends, and see opportunities that others might have missed.
Okay, I'm starting to see how this unknown market wizard was brewing. But even with that unique background and a solid training program, we all know trading is tough. Was it smooth sailing from there?
Not exactly. Initially, Brandt struggled to find a consistently profitable trading method. He tried different approaches, experimented a bit, but nothing seemed to really click.
So even future market wizards face their fair share of challenges and setbacks. That's reassuring to hear. What was his aha moment? How did he finally crack the code?
Well, he had this colleague, a seasoned chartist, who recommended a book that completely changed his perspective.
Okay, I love these aha moments. What was the book that had such a profound impact on him?
It was called Technical Analysis of Stock Trends by Edwards and McGee.
Ah, a classic. That's a must-read for anyone interested in technical analysis.
Absolutely. And for Brandt, it was a game changer. He devoured that book, finding clarity in the principles of chart analysis and how to identify trends.
So it wasn't about following some get-rich-quick scheme. It was about developing a deep understanding of how markets work and developing a framework for making informed trading decisions. What specifically resonated with him in that book? Did he ever mention any particular aha moments?
He was really fascinated by the idea that market psychology, specifically fear and greed, are actually reflected in price patterns. It was like he unlocked a secret code, a way to see into the minds of other traders and potentially anticipate their next moves.
So he was connecting those dots between human behavior, market psychology, and those technical patterns he was seeing on the charts. That makes a lot of sense. But I am curious, you mentioned earlier that those fancy cars in the Board of Trade parking lot initially sparked his interest in trading. Did he ever talk about what truly motivated him to become a trader? Was it purely about financial success, or was there something more?
That's a great question, and it really gets to the heart of what makes Brandt so interesting. While the allure of financial rewards was definitely there, he's always been very clear that true success in trading, for him, comes from a deeper place. He talks about the intellectual challenge, the constant learning, the satisfaction of mastering a craft that requires both discipline and creativity.
So it's not just about the money. It's about the game itself, about the challenge of trying to outsmart the market and achieving a level of mastery that few can attain.
You nailed it. It's about pushing his own boundaries and proving to himself that he could succeed in one of the most competitive fields out there.
Okay, now that's what makes this story so compelling. This guy isn't just driven by greed or ego. There's a genuine passion there for the craft itself, a hunger for knowledge, and a desire to really push himself to the limit.
You got it. And it's that drive that ultimately led him to develop his own unique trading methodology and achieve those phenomenal returns we talked about earlier.
Okay, I'm completely on board with this deep dive now. We've got a fascinating trader with an unconventional background, a passion for the markets, and an incredible track record. Let's unpack his trading approach and uncover the secrets of this market wizard, shall we?
Let's do it. So we've got Peter Brandt. This guy is not your average trader, right? He's a master of technical analysis, risk management, and market psychology all rolled into one.
And he's got the incredible track record to prove it. But I'm curious, what exactly did his trading methodology look like in action? How did he use all that knowledge to actually make trading decisions?
Well, his methodology was all about identifying those high probability setups. He'd focus on specific chart patterns that had historically indicated a high chance of a market move in a particular direction.
Yeah, so he wasn't just randomly picking stocks or jumping on any trend. He was looking for specific signals in the charts.
Right. Think of it like he was looking for clues, those telltale signs that the market was about to make a big move, like, a breakout from a consolidation range, a trend line break, or maybe even a classic reversal pattern, something like a hidden shoulders pattern.
Okay, so he spots one of these patterns. What's next? Does he just go all in and hope for the best?
Not quite. Remember, Brandt is all about risk management. He meticulously calculates his entry point, sets his profit target, and most importantly, he defines his stop-loss level.
Right. The stop loss, that's like your safety net, right? It limits your losses if a trade goes against you.
Exactly. It's like setting a boundary to protect your capital. And Brandt, he was religious about using stop losses. In fact, he's said many times that sticking to his stop losses has saved him from countless disastrous trades over the years.
So it's not just about being right. It's about knowing when you're wrong and getting out quickly. That's a valuable lesson for any trader.
Absolutely. And he didn't just randomly set these stop losses. He would place them strategically, based on the specific chart pattern he was trading and the overall market conditions.
So it's like a blend of art and science. You've got the technical analysis, the risk management, and that almost intuitive sense of the markets.
Yeah, it's like he's playing chess while everyone else is playing checkers. But, this reminds me, have you ever had that aha moment like Brandt did with that book on technical analysis? Have you ever stumbled upon a resource or a piece of information that just completely changed your perspective on something?
Oh, totally. There was this one time I came across a podcast just totally by chance, and it was about the power of habits. Yeah. It completely changed how I approach productivity and goal setting. It's amazing how one little piece of information can have such a huge impact.
It really is. It's what makes learning so exciting, those moments of discovery that shape our thinking.
All right, so back to Brandt's story. We talked about his early success, that pivotal book he read, and his unique trading style. What happened next? Did he just keep trading on his own, or did he branch out?
Well, Brandt's success with his own trading eventually led him to become a mentor to other aspiring traders.
That makes sense. I mean, who wouldn't want to learn from someone with his track record? But was there anyone who mentored him, or was he mostly self-taught?
Well, he did have a couple of key figures who influenced his trading journey. One of them was actually his mentee, a trader named Dan Markey. It's kind of ironic because Markey ended up becoming one of Brandt's biggest mentors.
Hold on, his mentee became his mentor. That's a pretty interesting twist. How did that happen?
Well, Brandt saw a lot of potential in Markey and took him under his wing. But as they worked together, Brandt started learning as much from Markey as Markey was learning from him. It became a two-way street, a real exchange of knowledge and experience.
That's amazing. What was it about Markey's approach that had such a profound impact on Brandt's trading?
One of the biggest lessons was this emphasis on an even more cautious approach to risk management. Markey was known for meticulously testing the waters before, fully diving into a trade.
So not just dipping a toe in, but really taking a slow and measured approach.
Exactly. It was like sending out scouts before committing the entire army to battle. He'd often probe the market with small positions to gather information, confirm his thesis, and, minimize potential losses.
All about minimizing those losses,
Yeah.
right? Protecting your capital.
Right. And this approach really resonated with Brandt, who was already a big advocate for strict risk management. They both shared that deep respect for the power of the market and the importance of protecting your hard-earned capital.
So this collaboration with Markey was clearly a win-win for both of them.
Yeah.
But did it have any impact on Brandt's overall career path?
It did. Brandt was so impressed with Markey's skills and judgment that he eventually entrusted him with managing all of his commercial accounts.
Wow, that's a huge vote of confidence. He basically handed over the reins to his mentee.
Yeah. And this allowed Brandt to focus solely on trading his own capital, which he found to be much more fulfilling and, aligned with his passion.
It's like removing the training wheels and letting him really ride freely. It reminds us that sometimes the greatest breakthroughs come from simplifying things and focusing on what truly matters.
Absolutely. And this period marked a turning point in Brandt's career. He was no longer just a talented trader. He was becoming a legend.
A legend. Okay, I'm dying to hear more about this legendary status. What happened next? Did he write a book, start a hedge fund, or become a recluse on a private island?
Well, he did establish his own firm called Factor Research and Trading back in 1980. It was a natural progression for someone with his experience and expertise.
Makes sense. From trading for himself to sharing his knowledge and insights with others. But you mentioned earlier that he had another mentor, someone who wasn't a mentor in the traditional sense. Can you tell me about that?
Ah, yes. This is where things get really interesting. Brandt talks about another trader who had a significant impact on his early success, but he doesn't actually reveal this trader's name in the book.
A mystery mentor.
Yeah.
Intriguing. What was so special about this anonymous trader?
Well, Brandt credits this mystery trader with being instrumental in his initial breakthrough in the markets.
So this unknown figure played a crucial role in shaping Brandt's early success, but never quite reached that same level of recognition themselves. That's fascinating.
Yeah, and I think it's a reminder that there's more to trading than just having the right information or techniques. It's about having the right mindset, the discipline to execute your plan, and the ability to manage your emotions effectively.
Absolutely. Two people can have access to the same knowledge, but their results can be vastly different depending on their psychology, their risk tolerance, and their ability to stay disciplined.
Exactly. That's why Brandt always stresses the importance of understanding your own trading psychology and developing a methodology that aligns with who you are. It's about finding your unique edge in the market.
It's not about trying to fit into someone else's mold. It's about figuring out what works best for you. But this brings up an interesting question. We've talked a lot about Brandt's focus on technical analysis. Did he ever use fundamental analysis? Or was he strictly a charts guy?
That's a great question. It highlights another important layer of Brandt's approach. While he's known for being a master of technical analysis, he also recognized the value of understanding those fundamental factors that drive market movements.
Ah, so he wasn't just looking at squiggly lines on a chart. He was trying to grasp the bigger picture, those underlying forces that shape the market. What kind of fundamental factors was he paying attention to?
Well, he was interested in things like supply and demand dynamics, economic data releases, geopolitical events, and even, overall market sentiment.
Okay, I can definitely see how those things could have a huge impact on prices. But how did he actually combine technical and fundamental analysis in his trading? Did he have a secret formula or something?
No secret formula, but he had a pretty insightful approach. He would often use technical analysis to identify potential trading opportunities, and then he'd look for fundamental factors that either supported or contradicted those technical signals.
So it was like a checks and balances system. The technical analysis would give him a signal, and then he'd look for confirmation or a red flag in the fundamentals. That's pretty clever. Can you give me a specific example of how this might play out in a real trade?
Sure. Let's say he spots a bullish chart pattern in gold. He might then look for fundamental factors like, maybe rising inflation, geopolitical uncertainty, or increasing demand from central banks to confirm his technical signal. If those fundamental factors align with his technical analysis, he'd feel more confident about entering the trade.
But if the fundamentals were telling a different story, he might hold back or even consider taking the opposite position.
Exactly. It was about integrating multiple perspectives to get a clearer picture of the market and make more informed decisions. But, Brandt's approach to trading went beyond just technicals and fundamentals. He also had this unique concept that he called popcorn trades.
Popcorn trades. Now that sounds interesting. What exactly are popcorn trades?
He used that term to describe those trades that give you a quick burst of profit, like, a popcorn kernel popping up, but then they quickly reverse, erasing those gains and sometimes even turning into losses.
Ouch. So it's like you get a taste of victory and then it's snatched away from you.
Yeah.
What causes those kinds of trades, and how did Brandt avoid getting caught in them?
He attributed those popcorn trades to chasing those short-term price swings and not having a clear exit strategy. He would emphasize sticking to his methodology, identifying those high-probability setups and having those well-defined profit targets and stop-loss orders in place.
So it's about having a plan and sticking to it. You can't get swayed by those tempting little pops and drops in the market.
Right. Discipline is key to avoid those emotional traps. That's how you maximize long-term profitability.
But let's be real, markets are constantly changing. Trends shift, new technologies emerge, and trading strategies need to evolve. How did Brandt keep up with all of that over such a long career?
Well, he was a realist. He understood that the markets today are vastly different from, back in the 70s and 80s when he started out.
In what ways?
The rise of high-frequency trading and algorithmic trading, right? It's made the markets much more efficient and volatile. The speed and volume of trading have just skyrocketed, and that definitely impacts how someone like Brandt, who relied on identifying chart patterns, approaches the market.
I bet. It's like trying to read a book while someone's flipping the pages faster and faster.
Mm-hmm.
Did he ever talk about how he adapted to all of these changes?
He did. He recognized that some of those classic chart patterns that worked so well in the past weren't as reliable in this new, faster-paced environment.
So what did he do? Did he completely throw out his playbook and start from scratch?
Not entirely. He adapted. He shifted his focus to longer-term chart patterns. Those patterns that weren't as easily influenced by the short-term noise of algorithmic trading. He also doubled down on risk management, became even more selective about the trades he took, and sized his positions more conservatively.
So it's all about quality over quantity. Fewer trades, but higher quality trades with less risk.
Exactly. It's like he became even more patient and disciplined as the markets evolved.
So he wasn't chasing every single dollar. He was playing the long game, adapting to the changing environment and protecting his capital. That speaks volumes about his ability to evolve as a trader and stay ahead of the curve.
It does. And it brings us to one of the most important lessons we can learn from Peter Brandt: the importance of continuous learning, adapting, and refining your trading methodology. If you want to succeed in the markets, you have to be willing to change with them.
It's not a set it and forget it kind of thing. You have to be a student of the markets, always seeking new knowledge, testing new ideas, and refining your approach.
You got it. And speaking of evolving, Brandt's career took a really interesting turn in the 1990s when he started managing money for Commodities Corporation.
Oh, wow, Commodities Corporation. That's a legendary firm, known for its incredibly rigorous selection process and its track record of success.
Exactly. They were always on the lookout for the very best traders in the world, the hidden gems. And Brandt's track record, well, it definitely caught their attention.
I can only imagine. So how did he actually land the job? Did he have to go through like a gauntlet of interviews and tests?
Oh, he did. They put him through the ringer, testing his knowledge, his analytical skills, his psychological resilience, everything. But guess what? Brandt aced it.
Of course he did. They must have been blown away by his insights and his experience. What was it like for him to go from trading his own account to suddenly managing money for this prestigious firm?
It was a big transition, for sure, and it definitely had its challenges. Initially, they gave him a relatively small account to manage just to see how he'd perform in their environment. It was around, let's say, $100,000.
So they were testing the waters, making sure he can handle the pressure of managing other people's money. How did he do?
He crushed it. He quickly proved he could generate consistent profits and manage risk effectively. They were so impressed that they gradually increased his allocation, and eventually he was managing a whopping $10 million for them.
$10 million. Talk about pressure. I can't even fathom what it would be like to have that kind of responsibility. How did he handle managing that kind of money?
It wasn't easy. He admitted that going from trading his own relatively small account to managing such a massive sum was a huge adjustment.
I bet. Every little tick in the market must have felt amplified. Did he ever talk about the psychological impact of managing that kind of money?
He did. He said that the sheer size of the positions he was taking started to mess with his head a little bit. He found himself getting more timid, second-guessing his trades, which wasn't like him at all.
That makes perfect sense. When you're trading your own money, you have a certain level of freedom and risk tolerance. But when you're suddenly responsible for millions of dollars of other people's money, the stakes are much higher. And that fear of losing, well, it can be paralyzing.
Yeah.
Did he ever overcome those challenges?
He did. He realized that he needed to detach himself from the emotional weight of the money he was managing and just focus on executing his trading methodology. You know, the same way he did when he was trading his own account. It was about going back to basics, trusting his system, and blocking out the noise.
So it was about separating his emotions from the money, even when the stakes were sky high. Did that shift in mindset help him get back on track?
Absolutely. He started trusting his system again, making decisions based on his analysis and not letting fear dictate his actions. And his performance improved significantly. He was able to generate those solid returns for Commodities Corporation, proving that his skills could translate to managing larger sums of money.
So he conquered those mental hurdles and proved that he was the real deal.
That's impressive. But if he was so successful at Commodities Corporation, why did he eventually leave?
Well, this is where things take another interesting turn. Despite his success, he eventually felt like he was losing his edge again.
Losing his edge. But he was generating good returns, right? What did he mean by that? He felt like the pressure of managing other people's money, the constant scrutiny, the fear of making a mistake that would impact his investors. It was all starting to stifle his creativity and his intuition. He wasn't enjoying the process anymore, and he realized his heart just wasn't truly in it.
So it wasn't about the money or the prestige at that point. It was about finding that joy and flow in his trading, that sense of freedom and alignment with his passion.
Precisely. And that realization led him to make a pretty bold decision. He decided to leave Commodities Corporation and return to trading his own account.
Wow. Walking away from such a prestigious position and millions of dollars under management, that's a big move. But it really shows his commitment to his own values and his desire to follow a path that was truly fulfilling. So what did he do next? Did he immediately jump back into the trading game?
Actually, he took an 11-year break from trading.
11 years. That's a serious break. What prompted that? Was he burned out, disillusioned, or just ready for a change of pace?
It was a combination of things. He wanted to spend more time with his family, explore other interests, He'd achieved a level of financial success that allowed him to step away without worrying about money, and he wanted to use that time to pursue other passions.
So it was about prioritizing his personal life, his well-being, and his own growth outside of trading. It's refreshing to hear that even someone so successful recognized the importance of balance in life.
Absolutely. But I have to ask, did he ever miss the markets during that time? Did he ever get the itch to trade again?
I'd be surprised if he didn't. Once trading gets in your blood, it's hard to shake it completely, right?
You're right about that. He did say the pull of the markets never really went away. He still kept up with the news, read about trading, and occasionally even made a few small trades to keep his skills sharp. But he was content with his decision to step away, and he knew he'd return when the time was right.
And did he? Did the markets eventually lure him back in?
They did. After 11 years away, Brandt felt that spark rekindled, that desire to test his skills, challenge himself, and jump back into the game. He resumed trading in 2006, bringing with him a fresh perspective, a renewed sense of purpose, and of course, a wealth of experience from his time away.
So it was like a homecoming, returning to his roots with a newfound appreciation for the craft.
Exactly. But it wasn't just picking up where he left off. He said it felt both familiar and new. You know, the basic principles of trading were still the same, but the markets had evolved and he had to adapt. But one thing that hadn't changed was his commitment to discipline, risk management, and that core trading methodology that had served him so well.
It's like riding a bike. You never really forget, but you might need a little time to get your balance back. How did he do after his return? Was he able to pick up right where he left off?
He did. His performance after returning was remarkable. He was able to generate consistent profits, navigate the markets with a lot of confidence, and even surpass some of his previous records.
Wow, that's incredible. It's like his time away actually enhanced his skills and gave him an even sharper edge. Did he ever mention what he learned during that break that contributed to his success upon returning?
He said the time away allowed him to see the bigger picture, not just in trading, but in life. He detached from the emotional roller coaster of the markets, gained clarity on his goals and priorities, and came back with a renewed sense of purpose and a deeper understanding of himself as a trader.
It wasn't just a break from trading. It was a period of personal growth and reflection that made him an even better trader. It's amazing how stepping away from something can actually bring you closer to it.
Absolutely. Brandt's story shows us that being a trader isn't just about making money. It's about personal growth, self-discovery, and the pursuit of mastery in a constantly changing field. But, you know, even with his wealth of experience and all that success, I'm sure he faced some setbacks along the way.
Oh, I'm sure he did. Every trader faces setbacks, right? It's part of the game.
Did he ever talk about any major challenges or lessons he learned from difficult periods in his career?
He did. He was very open about the fact that even the best traders make mistakes. He even shared some valuable lessons he learned from his own setbacks and drawdowns. One specific period that comes to mind is a major drawdown he experienced in 2013. It was the worst of his career, and it was a real humbling experience.
Wow. Even after his long break and that impressive comeback, a major drawdown must have been tough to handle. What happened? Did he abandon his methodology, or were there other factors at play? He was very honest about the fact that he'd made some mistakes. He deviated from his trading plan, let emotions get the better of him, and allowed external pressures to influence his decisions. He even admitted that he'd let his ego get in the way and had basically stopped listening to the market.
So even a seasoned veteran like Brandt wasn't immune to those psychological traps of trading. It just shows we're all human, and we all make mistakes, especially when dealing with the stress and uncertainty of the markets. How did he get through that challenging period? Did he have to make any significant changes to his approach?
He did. It was a real wake-up call for him. He realized that managing other people's money, even a small amount, was having a negative impact on his own trading.
Really? But he managed millions of dollars for Commodities Corporation. Why would managing a relatively small amount of money for others suddenly have such a negative impact on his performance?
Well, he realized that he was subconsciously altering his trading decisions. You know, to avoid potential losses that would reflect poorly on him as a money manager, he was basically putting unnecessary pressure on himself.
So he was letting the fear of disappointing his investors creep into his decision-making, which led to less than optimal results. It's like he was playing it too safe, second-guessing himself, and not fully trusting his own instincts.
Precisely. And that realization led him to make another bold decision. He decided to return all investor money and focus solely on trading his own capital. Again.
Wow, another big move. But it was clearly the right one. He knew he needed to eliminate those external pressures to really perform at his best. So what happened? Did he finally get that edge back?
His performance went through the roof. It was like he'd unshackled himself. You know, he was making bolder decisions, trusting his gut, and trading with a level of freedom and conviction that he hadn't felt in years. He was back in his element.
Removing that external pressure allowed him to rediscover his own unique trading style, that killer instinct he'd always had. It just goes to show how powerful our mindset and our environment can be when it comes to performance.
Absolutely, and that's a key takeaway from Brandt's story. To achieve those exceptional results, you need to be comfortable in your own skin as a trader. You need that unwavering belief in your process and the discipline to execute it, even when things get tough. But most importantly, you need to trade in a way that aligns with your values, your personality, and your own definition of success.
It's about finding your own path, not trying to copy someone else's.
Exactly. And that brings us to one of the most fascinating aspects of Brandt's story. His approach to trading psychology, summed up in his mantra, strong opinions, weakly held.
Ah, yes, that intriguing phrase. We have to dig into that. What exactly does he mean by strong opinions, weakly held? How does that translate into his trading strategy? Okay, we're back, and I'm ready to unpack this whole strong opinions, weakly held thing. It seems like such a crucial part of Brandt's success.
It is. You see, it allows you to be both confident in your analysis and open to changing your mind.
So you're saying it's about striking that balance between conviction and flexibility.
Exactly. You go into a trade believing in your analysis, but you also need to be ready to shift gears quickly if the market throws you a curveball.
I can see how that's especially important in trading.
Yeah.
Things can change so rapidly. It's about being decisive, but not stubborn, right?
Exactly. And I think this mindset goes hand in hand with another critical aspect of Brandt's approach, emotional control. He often said that one of the biggest mistakes traders make is letting their emotions cloud their judgment.
Oh, tell me about it. I've definitely been there, made impulsive decisions based on fear or excitement, and yeah, those usually don't end well. So how did Brandt keep his emotions in check? Did he have any specific techniques?
Well, one of his key pieces of advice was to treat trading like a business, not a gamble. It's about approaching the market with a detached, objective mindset.
Okay, I've heard that before. But how do you actually do that? It's easy to say, don't get emotional. But when you're watching your money fluctuate, it's hard to stay completely calm and collected.
I know, it's definitely easier said than done. But Brandt really emphasized the importance of having a solid trading plan, managing your risk carefully, and focusing on the process, not just the outcome. Don't get caught up in the emotional roller coaster of wins and losses.
So basically, it's about having a system and sticking to it no matter what, even when things get a little crazy.
Exactly. It's about taking those impulsive reactions out of the equation. Your decisions should be based on logic and analysis, not fear or greed.
It takes serious discipline.
It does. It's about developing that mental toughness, that ability to resist those emotional impulses and stick to the plan.
I bet that's where Brandt's years of experience really come into play. He's seen it all, ridden out those emotional storms, and developed that discipline to stay focused on the long game.
Precisely. He's learned to zoom out, focus on the bigger picture, and not get caught up in those short-term fluctuations. That's crucial for navigating the constantly changing market landscape.
Okay, I'm starting to see the bigger picture here. Strong opinions, weakly held, is about adaptability. Treating trading like a business is about objectivity and discipline. And managing your emotions is about staying calm and focused, even when the market is testing you.
Exactly. It's a holistic approach, encompassing not just technicals and fundamentals, but also the psychological aspects of trading.
All of this is so insightful. Did Brandt ever share any stories or anecdotes that really bring these principles to life?
Oh, absolutely. One that comes to mind is a trade he made in crude oil back during the first Gulf War.
Wow, that must have been an incredibly tense time for the markets. What happened?
Well, just before news of the attack broke, Brandt had been watching crude oil closely. His technical analysis showed a setup that signaled a potential upward move, so he entered a long position at around $29 a barrel.
Okay, so he's in, but this was before electronic trading was widespread, right?
Right. So the market was closed overnight. He placed his bet and had to wait, not knowing what would happen when the market reopened.
I can only imagine the anticipation. What happened next?
Well, overnight, the news of the attack broke, and the price of crude oil gapped up significantly. By the time our market opened the next day, it was trading around $37 per barrel.
So he woke up to a massive profit. What did he do?
Remember his mantra, strong opinions, weakly held. He had a plan going into the trade, and he stuck to it. He exited the trade at his predetermined target, locking in a substantial gain.
He didn't get greedy and hold on for more.
Nope. He knew the market could turn at any moment. He wasn't going to risk those profits by chasing even more gains. He stuck to his plan, managed his risk, and walked away a winner.
It's a classic example of discipline and emotional control. But did he ever have any regrets about that decision? Did he ever wish he'd held on longer?
He did admit later that he could have made even more if he had held the position. But he emphasized that sticking to his process and managing his risk was ultimately more important than squeezing every last dollar out of the trade.
It's about the long game, right? Making consistent, disciplined decisions over time, not chasing every single opportunity.
Exactly. And that shows Brandt's maturity and his long-term focus. He's not driven by greed. He's building a sustainable trading business.
And that takes discipline, patience, and the understanding that you're not going to win every single trade.
Absolutely. Another key principle he often talked about is the importance of waiting for the right pitch.
The right pitch. What exactly does that mean? It sounds like a baseball analogy.
It's about being patient and disciplined enough to only take trades that meet your specific criteria, even if it means sitting on the sidelines for a while.
So no chasing the market or forcing trades that don't fit your system. It's about waiting for those high probability setups that align with your trading plan.
Exactly. And this is where a deep understanding of yourself as a trader is crucial. We all have our biases and weaknesses. Those can really sabotage us if we're not careful.
I know. Sometimes I get impatient and I jump into a trade I probably shouldn't.
Yeah.
Or sometimes I hesitate because I'm afraid of making a mistake.
It happens to the best of us. That's why Brandt encouraged traders to really be honest with themselves about their strengths and weaknesses. Develop a trading approach that complements your personality and risk tolerance. There's no one-size-fits-all approach.
It's about finding what works for you, creating a system you trust, and sticking to it, even when the market tries to throw you off course.
Exactly. It's all about finding and honing that unique trading edge.
Well, this has been an incredible deep dive into the world of Peter Brandt. What a journey. He's not just a successful trader, he's a true master of his craft, a constant student, and almost a philosopher of trading. We've learned so much about technical analysis, risk management, and that crucial element of trading psychology.
He really is an unknown market wizard whose insights deserve to be heard.
Absolutely. So, as we wrap up, I want to leave our listeners with one last thought from Peter Brandt. Strong opinions, weakly held. Be confident in your analysis, but be open to new information. Be decisive, but be flexible. And most importantly, be true to yourself as a trader. Find your edge, develop your system, and trade with both discipline and conviction.
Couldn't have said it better myself.